Joining me now, Phil Blancato, Chief Market Strategist at Osaic. Phil, thanks so much for being here.
Thank you for having me.
So, Phil, I want to kick things off with a disclaimer. We are filming this on Wednesday ahead of tech earnings and the Fed decision. So, by the time our viewers are watching this, we'll have a lot more information. So, regardless of those headlines, though, what's the investment story that's likely to matter long after the week is over?
I think it's a period of volatility that you have this situation, regardless of what the Fed does or does not do, and even tech earnings. We've seen company after company report exceptional earnings. Look at Micron Technologies, a really impressive earnings beat. The stock's down quite a bit from its high. So you have this period of time right now. It's not unusual, the July, August, September period, to have waves of volatility. And there's reasons for it this time, but there's always reasons. So I would expect investors to say, this is your opportunity to fill both fists with cash, go into the market and say, where is the stock that I've been wanting to buy today? Is it something that's finally on sale? Regardless of the Fed, the price of oil, or even earnings, what are the quality names that you want to own? I think is becoming, not quite yet, but becoming the opportunity to do just that.
Okay, so two-part question here. Where do you get those fistfuls of cash? Do you have to sell some of your winners to get it? And then when do you know if a stock is on sale enough if we're going to continue to see volatility?
And that's two very good questions. I think you take the cash from where you have won, and I'm sure most of your viewers have won a ton in Nvidia or Palantir, which is off a bit. But it's not a terrible idea to rotate from the names that got us here to rotate to the names that I think are the next wave of leadership. So think about the software that got us here. Think about the chips that got us here. But now I think it's much more about the ancillary impact of AI, whether it's the cabling, the data centers, the power for it, or other parts that would not only diversify your portfolio, which is always a good thing. It also means you can go into a sector where I think we're going to get great growth. So that's where the cash should come from. And then the other part of your question, when I think about where we are from an impact standpoint to the next wave of this market and where what the volatility is going to look like and how I would manage my portfolio here. I think sometimes we've forgotten that in every sell-off there's opportunity. So looking for something that's been really punished for no good reason is a good place to start. I'll make it simple on you. Look for a name that's off 15 to 20%. You're going to find them. Look at Micron, down almost 20% from its all-time high. And I'm not recommending it just yet. I think it's an excellent company. I have some other names I'll talk to you about today. But I think you want to draw the line at 10% down and then say, if there's something greater than that, why? And if you find, in most cases, with these double-digit, sometimes triple-digit earnings growth, that's where you make your bet.
But here's the issue. If we're seeing this rotation into other areas of the market, some of the hardest hit stocks are in tech. So does that mean that tech exposure overall should be less, or should we just be, you know, adding exposure to other tech stocks?
I think you add exposure to other tech and tech related areas. So I don't want you out of tech, but think about what's coming, whether it's obviously the SpaceX is what this incredible jump to start, and now it's been a bit of a disappointment, but I think it just takes time. With Anthropic and OpenAI behind it, those are names that are going to be very interesting to be a part of. But that aside, leave those crazy things aside that there's these mega IPOs. It's switching from, say, the Metas of the world, which is still a good company, but obviously struggled, to Google, which put up an incredible number, but yet still struggling, to other areas that say, today I want to talk to you about an energy company. And the reason why is it's AI related. You can almost argue everything is AI related right now. We think about a Western Digital, another company I really like right now. Companies that are putting up high double digit earnings growth, if not triple digit. And those are names that I think are still to benefit. So it's not that you're out of tech, but be tech and tech related. Why? Because as we move up the stream from AI to creation to implementation, you want to win on implementation and less on creation right now.
Okay, so Western Digital does fit the bill. It's down more than
Yeah.
25% this month, although still up over 150% year to date. What's the other AI company that you said you like?
It's an energy company. Now you got to think I'm crazy for calling it an AI company. It's called Mastech, but the company's going to post 170% earnings growth. It's got $20 billion backlog. Why? Data centers. So that's why it's AI related. They are a multifaceted energy company That's interesting in of itself, using different types of energy to meet this demand we have for power. But primarily, they're going to be a source of power for data centers. And why is it relevant? Because we need a lot more power. So I want to see your portfolio be paired. I want, on one hand, a Western Digital, on the other hand, an energy company. While they're both going to be impacted by the growth of AI, they both are necessary components in the food chain, the supply chain of AI. Without them, you don't have a successful implementation of AI. That's my argument. I want to see you do really well with companies that have incredible earnings growth, but are necessary for the future growth of AI. That to me is the difference.
Time for a quick break. Thanks to GoDaddy for sponsoring today's video. I spend a lot of time talking to people building businesses, so I wanted to see how easy it actually is to go from an idea to a working website using AI. So I decided to put GoDaddy Aero AI Builder to the test. Instead of writing code or starting with a template, you just describe what you want in plain English. I asked it to build a website for a financial newsletter with a place to publish market insights, feature video interviews, and grow an email list. It asked me a few questions about what exactly I wanted to build. Then, within minutes, it turned that prompt into a working website. Then I refined it through conversation. I asked it to change the colors, rewrite the copy, reorganize the homepage, update the header, and even redesign the logo. And it updated everything from those prompts. When you're ready to publish, hosting, security, and a subdomain are included. Every site is also optimized for search engines like Google and AI answer engines from the start. If you're wondering, no, I'm not actually launching a newsletter, but maybe I should. Stay tuned. Anyway, if you've had an idea sitting in your notes app because building a website sounded way too complicated, this makes it feel surprisingly approachable. Click the link in my description box or scan the QR code to start using GoDaddy Aero AI Builder with 50 free credits. Thanks again to GoDaddy for sponsoring today's video. So AI is still very much the theme as you look ahead, but we have seen this pretty sharp sell-off in tech. Do you look at that at all as a sign that the AI trade is starting to crack, or is it really just a reset before the next leg higher?
I think it's a reset before the next leg higher. There's been some profit taking. That's normal. Look, I'm a big fan of small cap stocks. I think international offers a defensive play in your portfolio. But there's no denying when we have a $700 to $1 trillion spend this year on AI, that to some degree is inflationary, but on a bigger picture is an impact with all the companies that feed off that trough. So sure, we had a little bit of sell-off here, but you've had these incredible years of explosive growth. Eventually, there's some profit taking, especially at a time when the narrative is, did they spend too much? Is my favorite phrase is the juice worth the squeeze. In other words, is all this spending going to really equate to something more powerful? And when you look at today's data, of the 22,000 companies that are effectively using AI every day in an intense manner, they're adding people to the workforce, not detracting. Their productivity is up anywhere from 5 to 8%. The future of American productivity is in AI. So I think it's just an opportunity to pivot and be prepared for a multi-year period of growth in this sector. Not this explosive growth, not these ridiculous 20, 30, 40% returns. I think that's silly. But I do think a steady growth in your portfolio, not this is the only portion of it. You want to be not just in AI, but have it as a core component of your portfolio.
We'll talk about the other portions of the portfolio in just a second, but just bringing it back to the Mag 7, obviously we'll know a bit more when the big tech names report, four of them today and tomorrow. But have they peaked, do you think? Or do you think that they will be part of the next leg higher once we see this reset and profit taking play out?
I was never a fan of painting them all in one broad brush because they are really different companies. But for example, if you're a $3 trillion Apple Apple company, Apple's a $3 trillion company, almost $4 trillion today. If you think about that, to make it an $8 trillion firm is really hard. That's a lot of sales globally and domestically. So there's so many things that impact a company that's that size to make it bigger. There is a headwind, there's a ceiling to all these names, whether it's Nvidia, Meta, or Google, and so on. Look at the antitrust suits that Google's fighting in Europe. So I don't think these names should be painted in one fell swoop. I think Google's probably the leader of them all right now. Nvidia's stocks has been really difficult to push higher, especially at a time when China's trying desperately to take them out of their supply chain. So I would say I'd rather see you have less Mag 7 and much more of the other stocks. But if you had to ask me which of the Mag 7 I like the best, I'll give you a Mag 8. I'd say SpaceX over all of them. I think the long-term opportunity in SpaceX is quite fascinating. but I'd go differently and say if you had to force me to pick one, I put Google first and Apple second, and the rest are going to take some time to capitulate. Microsoft's an outlier in that it's something we use every single day, but again, a massive company that's going to make it very hard to grow from here. Not at a